to PoorConsult's YouTube channel. In today's video, we're gonna talk about margin trading, futures contracts. I'm gonna teach you how you can open long and short positions in crypto markets using different centralized exchanges, how you can benefit of them. We're gonna talk about the risk associated with it, and we'll have an example with you, the practical example, so as you get very familiar to the entire process. And if you decide to trade in these volatile markets, which obviously does give you a good chance of capitalizing in these Bitcoin and crypto market price volatilities, but it also has lots of risks in it. We're gonna talk about them as well, so then you can make your decision and come up with an idea whether you want to trade these markets or not, and whether you're gonna use margin to trade in here or not. So we're gonna talk about leverage trading. All right, so with that out of the way, let's jump right into it. So first of all, before I show you in practical way how you can accomplish the task, how you can open the short and long positions depending on your trade expectations, first of all, let's get into the theory and see what does it mean to do margin trading, all right, leverage trading, what it is. So let's say, guys, you have only $1,000, all right, you have $1,000, and the Bitcoin currently is trading at let's imagine $25,000. Well, I guess today it has dumped much less than that, but let's say Bitcoin is trading at 25K. You have $1,000 and you want to trade this market, all right. So what you can do, we are talking about margin trading, all right. First of all, we focus on margin. And what is margin trading? Let's say you are on Binance, you have a Binance exchange account, and you have $1,000 there. So margin trading means actually going long. It means it's a bet, all right. Look at it and think of it just a bet. So when you say you go long, it means you expect the price to go up. All right, that's what it means to go long. All right, to expect the price to go up, to bet on an event that the price will increase during a certain period of time. Go short means that it's gonna go down. All right, simple as that. So now on Binance, you can have spot trading, all right, when you are trading with the money that you have, or you can jump into margin trading, which means that, let's say you are expecting the Bitcoin's price to go down furthermore. Probably out of your fundamental and technical analysis, you have come to an idea that the fair Bitcoin's value in coming days is 20K, all right? That's the price you are expecting Bitcoin to be at in several days or within a day, up to you, whatever your predictions are. But you think that it's gonna go down. So what you do is you open your trading account in Binance, which is being done in several seconds, yeah. And then what can you do is going short means the following. First of all, let's say you put your $1,000 into your margin account, all right. You have $1,000, and for $1,000, let's say Binance gives you, if you go with 10x margin, yeah, 10x, it has different for different coin pairs, it gives you the maximum amount of leverage you can get from the exchange. And let's suppose, just as an example, that you can get 10 times more of your collateral that you have. If you have $1,000 of a collateral that you put in your margin account on Binance, suppose that it can give you 10x, up to 10x, and then you decide to take all that 10x, you decide to borrow it. You're borrowing 10x the amount that you can. And for example, in this case, suppose you can borrow 10x in $10,000, which is less than half. Let's say, just make it simple, okay, let's make, for simplicity, let's suppose you can borrow 25x, okay, just for easier to you to understand. 25 times your initial amount you can borrow from Binance, which means you can borrow Bitcoin equivalent to 25 times 1,000, 25,000. So you are borrowing from Binance 1 BTC, all right. Out of your 1,000 collateral, Binance gives you 1 BTC. Of course, you cannot withdraw this BTC. It's not a gift. Today is not Christmas, so nobody is giving you 1 Bitcoin for free. It just gives you this. It lends you this 1 Bitcoin, and lets you to trade on it. All right, so because your expectations were the Bitcoin price to go down to 20k, then obviously once you have borrowed this 1 BTC, you are going to sell it right away, right at that moment. So you are selling this 1 BTC and you are sitting with, the price is 25k, yeah, so you are sitting with 25k. Yes, okay, so this is the money you have received after selling the borrowed 1 Bitcoin from Binance. And then you are waiting until the price reaches your target level. If it goes the way you want, it goes down. So let's say it does reach your target level of 20k or whatever, yeah, whenever you want, you can close the position. So when you're closing the position, let's say it reaches 20k and then you say, all right, enough, it's 20k, then you have 25k, right? So you are buying 1 Bitcoin back using 20k. So minus 20k, all right, minus 20 is 5k. So now you have 1 Bitcoin that you buy and you have 5k. So this Bitcoin that you buy at a lower price, you give it back to Binance, say thank you man, thanks for borrowing me this 1 Bitcoin, and then you profit is 5k. Easy as that. Understood? All right. Now you can ask me, so what's the caveat in it? Where's the elephant in the room? And the elephant in the room is that if the price didn't go down and then it reversed back and went up against your expectations, all right, it did go up, then for a 10x leverage, the price, if goes up just 10% against your target, yeah, let's say you borrowed at 10x leverage and the price went up by 10%, and 10% of 25,000 is 250, yeah, 2,500, sorry. So $2,500 it went up, then your initial collateral gets liquidated and you lose it all. So for 20x, it should go up by just 5x, all right, 5x. For 25x, it should go up by 4x, I guess, yeah, 4%. So 4%. You have borrowed at 25,000, and then if the price goes up by just 4% against your position, yeah, you are betting it's gonna go down. But if it went up by just 4%, all right, and if we calculate 4% of 25,000 is 1,000. So if the price becomes 26,000, then your 1k gets liquidated, exchange takes it as a profit and says goodbye to you, and you lose it all. All right, so this is what we call margin trading, and I hope it makes sense now. If you just delete it, and the same applies for going long, right? If you have, again, if you have 1k as a collateral, you can also bet that the Bitcoin price now is 25k, is gonna go up. Then what you do is you don't borrow Bitcoin, rather you borrow USD or USDT, okay, whatever your collateral is in. Let's say 1,000. Now you say, all right, I don't want to go too serious, like 3x is enough for me, and then you borrow 3,000, yeah, you borrow $3,000. Altogether you have 4,000. All right, you have 4,000, and then you wait, you have borrowed USDT 3,000, yeah. This is your borrowed money, this is your initial, total you have 4,000, okay? And what you do, you buy Bitcoin right away. You have 4,000, you are buying Bitcoin. Let's say how much you buy. It's 25,000, you have 4,000, so it's like 6 times less, yes, 6 times less. So you are buying approximately 0.15, yes, 0.15 Bitcoin with your 4,000 at 25k price, and then you hope the price goes up. If it does go up, it becomes, let's say, 50k within a day, it doubles up. What do you do then? You sell, you had 0.15, so you sell at 50k for 8,000, yeah. It doubled up, right? 8,000. Then you owe exchange 4k at 3k. You, out of this 8,000, you pay your debt of 3k to the exchange, and then you are left with 5k of pure profit. All right. So this is exactly the way this margin trading operates. Again, if you are shorting, if you hope the price is gonna go down out of your predictions, you borrow the coin, sell it immediately when it goes down, buy it back. All right, pay your debt and be left with the profit. If you hope the price gonna go up, again, don't borrow the coin, borrow the dollars, borrow the dollar amount, buy it right away. The price goes up, sell it on top, and then pay the exchange back the money you have borrowed and be left with the pure profit. All right, so easy as that. This is for margin trading. The same technique applies for futures contracts, exactly the same logic. What's the difference? The difference is that futures contracts are much riskier, meaning that you lose much more when the price goes against your predictions, and you win much more if it goes in your direction. All right, so this is much riskier than margin trading. And for futures, guys, people do futures trading, I'm telling you, not for gambling. If you just behave the same way as I explained to you for margin trading, you do the same in futures, you most likely will lose, because it will be just a sports betting, like a bet. Don't do that, it's very risky. For futures, why then you can ask me when to do futures contracts. Futures contracts apply only when, let's say, you have a big position, a portfolio of $100,000 in different coins. You do have it, and then you are afraid of the price go down, and then you start losing on your portfolio, then you want to open a futures short contract. All right, so bet that the coins or one of the coins, the major, let's say Bitcoin, is gonna go down. You open a shorting future contract on it, and when the price does go down and then you start losing on your portfolio, you start losing this 100k, but then you start earning in futures contracts. So it goes down, then you earn a lot when you open a futures short position, because futures are very risky, and if it goes your way, you earn a lot, and these earnings are compensating the loss that you are incurring on your main portfolio. All right, so this is the entire logic of futures contracts. But for now, for the beginners, you don't want to do that, forget about it and focus on marginal trading. And now let's go back to the chart, and I'm going to show you exactly in practice, get yourself familiar with Binance and show you how you can trade on Binance, margin trading. I mean, once you log into your Binance page, let's go to trade, and then we go to margin. All right, choose margin. Now you see this page. If you're seeing it the first time, it might seem a little bit too overwhelming, like lots of charts and numbers in here. Don't get afraid, it's cool. Here we have just the Bitcoin price showing you only what you need to pay attention to is this main chart. All right, and then you have the pair. From in here you can choose the pair you want to trade. Now it's BTC USDT. I'm gonna choose ETH USDT, so click on it. Now you see it has changed to Ethereum. Then we can focus on the center of the screen where we see the chart, where you can do your technical analysis or whatever you do. Obviously, a much better alternative to this chart is a trading view, which is more user friendly, and most of the traders do prefer it. You can have like more indicators and lots of other options to apply on these charts, but for now, for simplicity, let's go back and say we're using Binance. You can increase the the screen. You can do whatever you want to do, read these charts, do your analysis, and then after it, let's say we have come to an idea that we want to short the markets. Once we short, the most important part is to get focused on this lower part of the screen where we have, as you see, the left side and the right side. So for now, first of all, because we are shorting, then in the beginning we are focusing on this right part. Okay, so here is where the entire process will start. So as you remember, in order to short, first of all, we need to have collateral. We need to have some money that we put in our account as a collateral. In my case, I have $19.5. So if you are using it first time, you have nothing in here, so you need to transfer from your spot account to here. To do that, first of all, click on here, transfer collaterals, and then choose fiat and spot. This is where your funds should be, right? Your spot trading account. And then you choose, you have several options in here. We choose isolated margin because this is easier for now. We just focus on it. Trading pair is ETH USDT. Then you have two options, either Ethereum or USDT. I have chosen, obvious, you can choose both of them, it doesn't matter which one you choose. I had USDT, so I have transferred 19.5 USDT, choosing here, type the amount, click confirm, and that's it. That's I've done already now. So from here on, what I want to do is, because I'm shorting, so I want to borrow Ethereum, and as Binance tells me, it's up to 10x. So 10x is the maximum amount of Ethereum I can borrow. Based on my account, I have 19.5, so $195 worth of Ethereum I can borrow right now. So let's do it. First of all, you come here, because, and then I want to sell it, so we focus in here. This is borrow, so you click on borrow, and then you come here, you see I don't want to borrow dollars. I would have wanted to, I might have wanted to borrow dollars if I was about to go long, but I'm going short, so I'm borrowing Ethereum, and the maximum amount of Ethereum I can borrow is this much. It's probably too much for me. I want to borrow half of it, 50% of Ethereum that I can obviously borrow, which is like 5 times the amount of money that I have, almost like $100 worth of Ethereum I'm borrowing now. So you click on confirm, and once you do it, you see that now you have borrowed the amount that you wanted to, 0.07 Ethereum I have now. You have it now. What do you want to do? Because you think the price is gonna go down, so you want to sell it right away. You click on the max amount. It's again market, because yeah, in here you could actually, I will tell you, I forgot, these are 3 options, these trading options that you can do: limit, market, stop limit. I'm gonna explain the differences in a second, but just for now, because I've already borrowed and I'm probably losing some money now, so let's, without losing some time, let's click on market, which means I'm gonna accept these market prices, and I have borrowed the amount, so I want to sell it. I am selling the Ethereum right away. The total must be greater than 10. Well, it's not enough. I need to borrow a little bit more, because the minimum amount to trade is $10 worth. So I'm gonna click on borrow, and I want to borrow a little bit more. It obviously wasn't enough, so I'm gonna borrow the entire amount I can. Confirm borrow. So now I have 0.14 ETH. I click on max, I say sell Ethereum. It's not enough. Why? What's the price? I have 0.14 ETH. So it must be greater than 10. Oh, you see, I haven't chosen maximum amount. Sorry. So here, all right, maximum amount. Sell Ethereum. All right, order is filled. Now I have sold my Ethereum, and as you see, I have $197. That's the amount of dollars that I have. And let's say the price has gone down as much as we wanted to. Now we want to buy back the Ethereum, okay? Obviously, it hasn't changed yet now that much as we wanted to, but let's just suppose it did, and in reality, you want to wait until the price reaches your target. But this is for demonstrative purposes, so I'm just going to buy back the Ethereum right now. So we focus on the left side, again, market, again, normal, and again, I'm gonna use all the money that I have to buy back Ethereum. All right, so now I have bought it back, and I have 0.158 Ethereum, and now I need to pay back my debt, right? To do that, click again on your borrow and choose repay. Now you choose repay ETH USDT. You want to borrow Ethereum, yeah, because that's what you have borrowed. You want to repay the max amount and click on confirm repayment. Once your repayment is done, you still have some Ethereum in here which you can sell for profit. You click on choose, the maximum amount, click sell ETH, and now you see I have $19.78. I had $19.5 at the start, and now in the beginning, and now I had earned $0.28. Just a second, for second trading I have earned this much. It means that the price has gone down a little bit once I started the trade. And if you wait, it's now it's trading at how much is 1,234. Yeah, if you wait, if you sell, borrow Ethereum now, you sell it now, and then you wait till the price goes to 1K, and if it does, and then you buy it back, return it to Binance, then obviously your profit will be much more than this. So this is the simple step, guys. If of course if you were about to go long, you can do the opposite. Yeah, you could just you still have the collateral, let's say in dollars, and then you click and borrow. If you want to go long, then you are choosing not Ethereum, but you are choosing USDT. You are choosing the amount of USDT you want to borrow. This is the max amount of USDT that you can borrow. You see maximum amount is 10 times of your collateral, which is this much. You can borrow it, and once you borrow it, because you are going long, you are borrowing it, and then you are buying the asset. You are buying the Ethereum after you are borrowing it. You are buying the Ethereum and you are waiting when the price goes up, okay, up to your expected level, then you are selling it. And when you are selling it for a higher price than you have bought it, then you repay your debt. Again, click on borrow, but click on repay. You repay your debt, and then you are left with profit. Okay, so this is the way this margin trading works. Obviously, I don't recommend you. Be very careful. Actually, any margin more than 3x is very risky. Yeah, very risky. So be careful. I don't recommend you. Don't take it as a financial advice in any possible way. I don't recommend you to use 10x or even more. I mean, for this trading pair is 10x, but sometimes you can get up to 20x or more depending on the exchange you are trading at. Don't do it. More than 3x, I mean, I don't say don't do it, but just want to let you know that more than 3x is very risky, because if the price, again, as I said, goes in the opposite direction, your collateral can be easily liquidated. All right, you can lose it all. Just think of it and be aware of it. Today's video, if you enjoyed it, if you like the content, please make sure to give a video a thumbs up. It does really help the channel to grow and attract more people. If you haven't subscribed yet, please do, so as you won't miss any more future videos upcoming. In the next video, we're gonna talk about the types of those orders that I have shown you, the market orders, limit orders, top limit orders. I'm gonna describe and explain to you the differences, and I'm also gonna talk and discuss with you some very popular trading strategies and any type of a trading knowledge that you might apply based on those type of trading orders, like stop limit, limit, and stuff like that. So definitely stay tuned and watch for the new videos. I hope you can get benefit out of it, and yes, wish you good luck in trading. Thanks a lot, and stay with PoorConsult. See you in another videos.